who the fuck are you to say that somebody with $1 million is more responsible over their money, or is smarter, or is more able, or still wants to lose all of their money? Yeah, people have got to stop thinking about the cycle. The cycle.
It's a bull market for everybody but me.
It's what your friend owns, not what you own. If Bitcoin goes from 100,000 to 250,000, we're all like, oh, find me a better asset. This is shit. It needs a weaker dollar. Everybody needs a weaker dollar. What it was a coup by the technologists.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. Raoul Pal dives into the banana zone, the future of crypto regulation, tokenization, meme coins, and the unprecedented macro opportunities ahead.
Yeah, I mean, that's always the first phase of it, don't forget. I mean, if you go back to 2020, it was not until like November that ETH started really performing. It was all Bitcoin dominance. And Bitcoin dominance topped almost at the right moment. Bitcoin took off. Now, we haven't got to, I think my next phraseology is going to be the banana singularity. That's when everything goes bananas. But what we're seeing is, this is a tricky market like this, because what you're getting is a whack-a-mole, which is never the thing that you're owning.
It's a bull market for everybody but me.
It's what your friend owns, not what you own. And then you get like a week in the sun where everything goes up and then it goes off again. So we're not at the banana zone singularity point yet. That will come as well. That's probably, sometime Feb, March, when it all gets silly. Yeah, exactly right. And then, but, we did see the first signs of it, all of the, as they were called, Dino coins, all of the longer standing crypto, all had face-ripping rallies, which was good for them. Then we had the AI ones, and it's been very sporadic, as you say. But overall, the whole space is moving higher, but it just is all happening in sporadic periods, and then it pauses, and it's been pausing for a bit now. Like Solana's done nothing for a while, and then you look back and it's done another 50%, and it's an interesting market. Normally, what happens at this phase is we should rally into year end pretty strongly in everything, but then the real game gets played in first quarter. So from September to the end of the year, the dollar rallied. September, the end of the year, rates went up. Same narrative. It was all about tariffs and, what's he going to do and how's it going to play out. Almost exactly as the year turned, the dollar went lower and rates went lower. So I've been producing a chart showing that global liquidity tightened and it has a 10-week lead time. And that should mean that at the end of the year, we get a correction. Now, that would not be surprising. Let's say Bitcoin gets to 120, it corrects back down to 100. I mean, that's just normal course of business. But Twitter being Twitter is losing its mind over this correction. I get messages, is this the one? I'm like, calm down. You should be expecting at least another 4 or 5 of these over the course of the next year. They're just regular. But for some reason, that people are losing their minds. But once that's out of the way, usually it should be good. Now, liquidity needs to come back, so we need to see the dollar weaken. We need to see rates come down somewhat. Those are key things for us. I don't see any reason why not. And then there's a bunch of technical stuff like the draining of the Treasury General account over the period for the budget negotiations and stuff like that. And normally that's a big injection of liquidity. And the Fed are doing other rinky-dink stuff, like they're going to cut interest rates on the reverse repo, which basically is trying to force money out of money market funds and into the private sector.
After a limp weekly close, Bitcoin is struggling to preserve support in the mid-$90,000 zone as the holiday period looms. Bitcoin has confirmed a bearish engulfing candlestick formation. Popular trader and analyst Rect Capital wrote in one of his latest posts on X, this time the weekly chart. Rect Capital warned that BTC had lost weekly support, signaling the end of a 5-week uptrend. Bitcoin is showing increasing signs of transitioning into a multi-week correction, another post warned. Any relief rally, if at all needed, into these old supports could turn them into new resistance to confirm additional downside continuation. Others entertain the idea of a drop to old all-time highs from March at a now distant $74,000. In past cycles, it's been the norm for 30% pullbacks during the bull market. Trader Josh Rager noted in part of an X post on December 23. This current price action hasn't been fantastic, but it also has been awful. Imagine pulling back to $75,000 right now for a 30% pullback. Fellow trader gel-eyed comparisons to last year's BTC price action to predict a return to upside after a few more weeks of struggle. For some short-term hope, meanwhile, Charles Edwards, founder of quantitative Bitcoin and digital asset fund Raoul Investments, revealed that December 26 is traditionally a high-performing calendar day for the S&P 500. The 26th is the highest returning day of the year historically, he told X-followers alongside data from Carson. X-mass relief bounce coming.
This is not a Republican versus Democrat election. It was fought on that, but what it was a coup by the technologists. They won the entire government. Whether it's J.D. Vance, to Vivek, to clearly Elon, to David Sachs, who was in the background doing all of this, to Mark Andreessen, to Brian Armstrong, they orchestrated this. It is their coup. So what we put in is not an old Republican administration of the past. We've put in the technologists who said, we're going to run the show now. And Trump gets the smartest people in the world to do this for him, and he gets to walk away with a good legacy because he can't be voted in again. So this is why he's very compliant with all of these guys as well. I mean, so that is the biggest change I think we have seen in an election cycle for a very long time. It's the kind of complete collapse of the political system as we knew it. And on a more serious note, well, that's a serious note too, but on a serious note, the next election and the elections afterwards are not going to be fought over capital and labor. So all political systems are capital versus labor. And it's the balance of power between the two that defines politics. Where we're going, there ain't no labor.
Well, because of AI and the technologists taking over, obviously.
And so the next election will be fought over, it's going to be like the humanist transhumanists. It's like pro-tech, anti-tech. And it's only going to get worse. And then there'll be parties trying to give AI rights. There's all sorts. But this capital labor thing, I think that was the last election that it's ever going to be the major thing, because it won't be labor. So yes, there'll be protective versus free market, all sorts of things that we know, but the change in how we think about things is going to be massive.
Holiday periods bring new challenges for crypto market participants thanks to extended periods of out-of-hours trading. The absence of the liquidity profile normally available on workdays can exacerbate moves up or down. Taking a broad view of the liquidity landscape on exchanges, popular trader and commentator Mark Cullen now sees two key levels to watch into 2025. One will be painful for bulls. Liquidity is stacked up like presents under the Christmas tree at 115 and at sub-80. He summarized on X alongside data from monitoring resource CoinGlass. The big question: which level gets hit first? And will we see a festive swing where both levels get a run? The accompanying chart shows two areas where liquidations would likely occur en masse should spot price reach them. A drop to $80,000, meanwhile, would constitute a regular bull market correction compared to previous BTC price cycles. Dips of 20% or more have characterized Bitcoin's march to previous all-time highs, with on-chain analytics firm Glassnode revealing that this cycle has been broadly less volatile than in the past. The deepest drawdown this cycle was 32%, Aug 5, 2024, with most corrections only 25% below local highs, reflecting spot ETF demand and rising institutional interest. Glassnode noted in part of an X post this weekend. And do not forget to subscribe to BitcoinZella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.